Welcome to the Indian Silicon Valley podcast. I'm your host, Jivraj, and today I have with me an extremely special guest. Join me in welcoming Mr. Kanwaljit Singh, the founder and managing partner of Fireside Ventures, who's one of the legends of India's venture capital ecosystem. Thank you so much, Kanwal, for joining me. Absolutely honored to be hosting you today.
Thank you. Thank you, Jivraj, for having me. My pleasure.
Great to hear that, Kanwal. And I want to dive deep into a bunch of aspects today, but I want to start with your explanation and understanding of the venture capital ecosystem of the country, because there's been a lot of conversations around the availability of capital, the maturity of the ecosystem, the success that we are now seeing, and all for the right reasons. But I would love to understand where you see VC innovating as well and how they can perhaps, scale themselves up as well when the founders of today's generation are surprising us day in, day out, right? Especially given that Fireside has a very unique verticalization approach that you've been able to successfully scale up. So with that context, I'd love if you can give us an overview with your 20 years of experience behind as to how you've seen the VC model happen till now and what do you perceive happening in the future?
Sure. So, like you said, I have seen about 20 years of this journey, both as an investor and as part of the ecosystem.
Right.
And I think, to be honest, the evolution, I would say, is still in the formative years. I think this industry is still young. It's still, got lots of headroom to grow into far more institutional and a much larger much like what we have seen in mature markets like the US and perhaps Europe and some of the other markets, China maybe. Clearly, the first trend that drove the almost inception of the VC space was really the Indo-US corridor. Yeah. So at least from the earliest of time when we started out, there was this whole concept of outsourcing, whether it was IT services, then it became business process outsourcing. And that drove a large amount of capital into supporting some of these organizations in building large global solutions where you service the world and you obviously provide the execution from India. So the focus was always on cost arbitrage, on execution excellence to some extent. And that's how the VC industry also came into being. Some of the early investors came from the space, who came from IT services, who understood the dynamics of what was going on. And then as the India consumption story started maturing, first we had the infrastructure of telecom come in, and telecom, then allowed for a whole new set of innovation, what we used to in those days called value-added services, ringtones and ringback phones and all that. And then, the banking system got more advanced, and then you had a lot of other stuff happening. And then, of course, the whole e-commerce thing happened. So one is the journey has been, in a way, almost infrastructural building blocks getting placed. Yeah. And India as an economy leapfrogging from legacy to the future, almost by skipping sometimes the generation. So telecom allowed mobile phones to come in when there were no landlines even. Yeah. Banking allowed for online banking to come in when there were not enough branches to bank with. So that's been one side of the facet of the exciting journey for us as investors, that we have seen this evolution of not just entrepreneurship but of infrastructure enabling entrepreneurship. Yeah. And I think from our own worldview of how the VC ecosystem has evolved, I think more and more the realization that you cannot just be a provider of capital. Yeah. Capital is becoming more and more of a commodity. Yeah. So therefore, what do you bring to the table, especially for a exciting, young, very high caliber, high quality entrepreneur, has to be answered very deeply. So, initially there were global VCs who set up shop in India. So that became the draw. This is a global brand name. There are people who have seen, this playbook or this game play out earlier, and therefore they became the hot, opportunities. But then, the next wave happened, which was more the Indian, VCs like Helion, like IDG, Chirate, like Nexus, Axel, etc. And that brought in a local sensibility of what the local ground market realities were and so on and so forth. So I think the VC industry is also evolving in some sense. Yeah. In trying to define what is the role that they want to play over and beyond the capital. And one of the trends coming out of that, apart from the usual value-added stuff that you try to do about trends, about understanding, I think there are 2 or 3 aspects that I have learned. One is I always believe that all VCs, we are as a class, we are king makers, we are not the kings. So that's one aspect that one has to completely imbibe and understand and almost internalize if you really want to be a VC who is coveted by the entrepreneurs and who's seen as a partner in the journey. Second thing that you have to learn is you have to understand what business issues a company is struggling with and how you can either help them with your knowledge or you can help them by providing an ecosystem that can support them, because these are very, very difficult situations for a lot of entrepreneurs. And being able to first empathize with them and then helping them find solutions. I may not know all the answers, but if I go out of my way and put all my effort in helping find a solution, then I'm truly seen as a partner.
Yeah.
And that's the last point, I want to point out is that's how the emergence of the vertical VC started coming through. So, there are people like us, there is Fireside Ventures, there are several other VCs who start focusing on verticals because they believe they bring deep domain knowledge. And initially, when honestly we started, we always used to think the verticals approach, the verticals not deep enough. So can you build a large franchise? I mean, I think that is now pretty much answered. There are enough and more investors out there who are following this approach.
No, that's very helpful, especially in a day and age of, FOMO, where you want to go agnostic and grab every opportunity that exists. It's good to see that, domain knowledge and value add, as you mentioned, so many of the things that founders truly need, and having that humility alongside is so important. And, in fact, I want to double click on that and help understand from your vantage point as to what these partnerships entirely entail as well, right? Because there is a lot of jargon out there regarding the definitions of what partnerships might look like. But after all, the founders do very often know more about their business, right? And they have the answers, and it's more like the coaching role, right? So if you can just decode how these partnerships look for you, especially having partnered and seeing journeys of wonderful brands that we consume on a day-to-day basis, it'll be interesting to hear from you as to what these entail and how you would like to define them.
So once again, there are several nuances to this, Jivraj. One is obviously that, like I said, we have to recognize what our role is and what the entrepreneur's role is. The minute you start mingling them up, that's when the problem starts.
Yes.
Now, coming to how our worldview evolves and how the entrepreneur can leverage that. First of all, I always feel that the VC is truly, let's call it a mentor, a partner, almost like a shoulder to lean on.
Right.
And that's something which is not fully, appreciated in that extent of the power of that opportunity.
Yeah.
Because entrepreneurship is by definition a very lonely business. It's somebody who's taken a big leap of faith, who's literally bet his career and his own life on wanting to build something which doesn't exist.
Yeah.
So having somebody whom you can lean on and having somebody whom you can call up at any point of the journey and say, listen, I need help. Even to just clarify my mind. I'll give you an example. One of my founders called me the other day and he says, there's somebody else that he has hired, a senior guy. And he says, I'm finding it tough to work with him. Yeah. And we just spent 15 minutes talking about, how he needs to go and have that conversation and, just the nuances of, some of those things, which are obviously born out of some experience that we may have had in our own lives or in our own experiences. So that's the first part, is keep the lines of communication open to the extent that, entrepreneurs should actually come and seek you out for guidance and advice.
Yeah.
I'm saying almost at a philosophical level.
Yeah. The
second is that, as investors, our strength is in the width of what we see.
Yeah.
So if it's let's say a consumer brand fund like ours, we see hundreds of companies every month.
Yeah.
So we start getting a sectoral or a worldview of what's going on. While an entrepreneur by definition sees the depth of things.
Yeah.
So once again, how do you marry the two? How do you converge the two? Saying here is a trend that is happening and we are seeing it in different ways across various businesses. And can that be adopted into a deep, insight that the entrepreneur can leverage. So that's another, I would say a strategic stroke value add from the VC partner to the entrepreneur. And the last one is that, as an investor, I have what we call the power of aggregation.
Yeah.
Today, Fireside, we have 25 companies in our portfolio.
Yes.
If you combine the 25 companies today, whether we are spending on Facebook or YouTube or Google, our digital marketing spend is top of the head $100 million. Now, $100 million is a meaningful amount to go to a Facebook or a YouTube and say, listen, can we create some kind of a partnership? Yeah. Same with Amazon, same with Flipkart, same with Nykaa, Big Basket, etc. So that's the other value that we can truly bring. And the last is the ecosystem, is really identifying experts who can help our companies. And what are those, relationships that we can bring together, whether it's hiring full time, whether it is just consultant, whether it is people you can bounce ideas off. So I would say there are many layers that we can, participate in this concept of how we can help our entrepreneurs in a very partnership sense.
How do you perhaps look at scaling yourself, scaling your insights, and maybe creating processes within Fireside itself that might help you and make your insights timeless, right? How does that happen? I think that'd be really crucial to understand.
Oh, absolutely. In fact, to me, that is the most important role that I have to play in the context of Fireside.
Yeah.
And my vision for Fireside, even before I started the fund, was really that I want to build an institution that outlasts me by decades, not even by years. Yeah. So first of all, it's the mindset. It's not about this starts with me and this ends with me.
Yeah.
Second is that I would honestly say that the role that I play in the initial formative years is all about building the right team, building the right culture, getting the right people on board, and almost helping them navigate this new world of venture investing. So incidentally, a lot of our people in the team, whether it's my partners, whether it's the next level people who have joined us, not too many of them, or rather very few of them, come from the investing world. Mm-hmm. So we bet on people who actually understand consumer brands more than who understand investing. And it was a contrarian bet. And, I've had these conversations with my investors to convince them that, this was the right strategy. And I think it's worked out extremely well, because in the initial days, you are really setting the foundations for who you are. What does your brand stand for? What can you really add as value to an entrepreneur's life? Yeah. And that aspect, I think we have been able to demonstrate very deeply, because we have people who came from those backgrounds, who understand the nuts and bolts of building consumer brands. Yeah. So that's, to me, the first, building block is right people with the right ethos, culture, and the right mindset of saying, what are we trying to build? Yeah. And second is that as they start, getting into the groove of things, allowing them to have the independence to, in some sense, make the mistakes and learn from them. Yeah. So while we have the guardrails, what we have done is we have this team of young vice presidents, which I would say is the middle layer. Yeah. And they are literally our sector experts. Yeah. So they own the entire responsibility of understanding sectors, of understanding what kind of opportunities are emerging, what trends they are seeing, what kind of deals. So it's almost like they become the face of the fund as the first point of contact. And these are people in their late 20s, early to mid 30s. So it's actually a very young team. So obviously, that's the team which will take it forward the next 20 years. And then I have partners who are, again, 15 years, 20 years younger than me, because again, I believe that, the continuity aspect has to be built in. So I'm not even thinking of how my insights can be transferred to anybody. I'm saying I can provide whatever I've learned, and I can provide the guardrails of saying, make mistakes, but, don't make the same mistakes again. Yeah. But I am hoping that by creating this culture and by getting this, high performance organization, we can create our own set of insights and our own set of learnings, which are collectively what you then carry forward.
Absolutely. No, that's wonderful, because I think the role of a VC being a founder in its own way also does not get spoken of enough. And I distinctly remember Mr. Bejul Sumaya mentioning on one of our previous episodes that he's a founder in the venture business, right? And that's just a fresh perspective to take. And in fact, I'd love if you can double click on a couple of aspects of building this culture, right? Because leading up to this episode, I had the pleasure of doing some more research and talking in depth to some of the Fireside team members, which distinctly had a great culture in mind. They were open about being they had this sense of founder empathy. There were these smaller rituals that all of them followed. And I've also had the pleasure of speaking to one of the VPs, as you'd mentioned, right? And there's this evident sense of wanting to actually add value and have that humility to do so, right? So if you can talk to us about how you've gone about building the culture at Fireside, I think that'd be really interesting to hear from.
So, again, the objective here is to live what you believe in every day.
Yeah.
So it's not that, so we started out by defining certain values that we want to stand for.
Mm-hmm.
And these values are, something very sacrosanct. So much so that, we say 50% of your annual performance depends on how you live up to the values and not just what your, capability and your competency performances were. So in a sense, you have to, define the framework of why this is important to each and every person. Second is you have to live that demonstration every day and every person. So if we are saying entrepreneur first, then how do you manifest that? And what is the, expectation of that one single statement that you expect from your team? Like small example, like you said, being empathetic to an entrepreneur, if they are not doing a great job or it's something that happened in their space, which is, completely counterproductive and the business may not do well, etc. Then, we may not always be able to write a second check or a third check. See, the business of what we do has to be still governed by some guidelines that we are responsible to our investors for. But the fact that, I cannot help you financially does not mean that I just say, okay, don't call me now, your business is tanking and I have nothing to do with it. So those are some of the things which have to be imbibed, because like I said, for us, entrepreneur is always the face of who we are. The success of the entrepreneur leads to our success. And as long as that mantra is, understood by the entire team, I think we have taken one big step forward. And second is, I think we encourage risk taking and we encourage people to make mistakes, because that's the other thing that I've realized. People get extremely nervous, extremely concerned about taking certain risky decisions because they worry about the repercussions on them.
Yeah.
So we have had situations when somebody took a wrong decision or something went wrong and we realized that there was a problem. But it's always about what do you learn from it. So some of these things are fairly obvious ones, but how you put them in practice and how you encourage them is really what we are hoping that the culture will get defined. And like I said, if I am thinking 20 years, and if I am saying that everybody who's joining me should think of it as their home for the next 20 years, it changes the perspective completely.
Absolutely.
So to me, that's the other critical aspect of culture building, is to think long term, to think about your evolution within this system, and being comfortable that if I have the opportunity, I want to grow in this system, rather than saying it's a stepping stone and I need to find something else after 2 years.
Absolutely. I think all of these pointers are extremely refreshing to hear. And I especially love the fact that you have to practice what you preach and you have to be able to first think with first principles as a founder, as opposed to, thinking investor first, or like whatever that means, like embody the spirit of what you're essentially doing. So I love that. Further, I want to, shift tides and understand more from the entrepreneur's lens as to again, something that perhaps Fireside has mastered in, and especially you have, to see a brand from the 5 to 500 crore journey, right? So I'm guessing that's the place where most it's either make or break. And that's where it's very pivotal to either like stick along or see the brand do well. So from your experience, if you can delve on some of the important aspects to keep in mind during that journey and how founders can leverage some of those lessons and make it actionable, I think that'd be great to dive deeper into. So over to you for that 5 to 500 journey mark.
Sure. So I think before I share some of our learnings, this 5 to 500 is also something which we have discovered along the way, because when we started out, 5 to 100 was a very high ambition target for us, saying can we build 100 crore brands in India? But now obviously we are seeing some of these brands achieving those big numbers, and it's very exciting. So if I break it down, I think there are 2 or 3 important aspects that are common to every time you see this kind of a success. And obviously the caveat is that, it's the right space, it's the right founding team, etc. Because, those are the givens. I mean, you can't pull this off without that. Fundamentally, what my learning, and I think as a team we have imbibed very clearly, is that especially in our business, and I'm sure in most other businesses, there are these stages of evolution. So you have to, again, the width question or width point that we've talked about earlier, you have to appreciate that what are those stages and what are the implications of those stages. So if I can broadly refer to it, I think a 5 to 10 crore revenue brand today, annualized, how they navigate to 100 or so to 50 crores is probably the first, I would say, stage.
Right.
And the reason for that is that at the 5-10 crore, you're really trying to figure out product market fit. You're trying to get some early indicator of consumer interest in your brand, what kind of repeats you're getting, what kind of channel strategy, is it D2C, is it e-commerce, is it offline?
Right.
Once you have a little bit of learnings around that, your entire effort is, okay, can I demonstrate that I can take this learning and create a platform which typically translates to a 50 or a 60 crore type of a revenue. So that to me is the first step. And there are certain very specific, almost experimental opportunities that you have to keep working on. You have to keep try, hit and miss, what is your product strategy, what is working, what is not working. So a lot of experimentation as you keep building on growth. The 50 to the 200 is really then pressing the growth accelerator. Once I have figured out who my customer is, what my channel strategy is, what products are working, now what do I need to do to take it to that, high growth kind of a situation? And there you start thinking about brand building. There you start thinking about customer engagement. There you start thinking about execution excellence and how that influences both your customer experience and your overall economics. And then from the 200 to 500 is really about institutionalizing the entire business. So there, you start thinking about processes, systems, and everything. And the common thread in all this is how you build your organization. So the 5 to 50 is a different organization. It is still highly entrepreneur-led. It is, a few, execution people who support you, but really it's the 1 or 2 top founders who are driving it, because this is still, the entrepreneurial energy that is coming through. 50 to 200 is when you start building the next layer. And at 200 is when you actually start building what I would call the real, scale organization, where you are, hiring all the CXOs, you are, getting some large investment partners on board. And then the journey is 200 could be 500, 200 could be 1,000. So I'm saying then, of course, it's a curve that can keep growing. And of course, the strategy is the other aspect that you keep questioning. So what drove it to 50? Is that the same thing done multiple times over will make it 200? Or is it something new you have to do? So channel choices become very important. For example, in our business, when do you consider going offline is a very important question. So it's easy to say, I'll start my D2C business, I'll do my e-commerce, but is that all there is? You want to go international? Is this a good time to go international? You want to expand your product range into new categories? Is that a good time to do that? You want to launch a new brand? Is it a good time to do that? So I think I would say that, there are so many parallel threads that need to happen, but I would break it down into at least 3 or maybe 4 stages and defining individually for each company, think what do you need to do in each stage as you start navigating it, which is really, I would say, the foundation of this one, because our business has a J curve. You cannot force it beyond a point. You have to allow the building blocks to happen. Good news is it's happening faster, it's happening with less capital, but you still have to allow it to happen. I mean, we have seen companies like Mama, we have seen companies like Boardlicious, where once you hit that J curve, just the customer acceptance of your product shoots up the business model. And that's where the economics start becoming interesting. That's when you start making more money, etc.
Yeah. No, for sure. I think, there's this saying that it's never been easier to start a brand, but it's never been more difficult to scale one. And this is exactly a testament to it, because if you can play out those phases, as you mentioned, I think the road becomes clearer as you move forward, and the examples do exist. But it's interesting, I want to take perhaps a step back and understand from you as to some of these choices that now seem obvious in hindsight, of course, right? Like the ones you mentioned, Mama, Vadham, Boat, Licious, Paperboat, all of the other Epigamia, right? All of these seem maybe obvious right now because there's insane consumer love. They've scaled now. They're, doing some really, really incredible stuff. But talk to us about in the moment, how did you figure some of these companies out, right? And there will always be, like, I understand that there's a thesis behind investing in startups. There's obviously great teams that you invest into, passionate founders, large markets. But beyond that, what actually makes some of these companies truly special? If you can help us double click and magnify on that front, I think that would solve so many of the mysteries that exist, especially given that the audience that is young and wants to aspires to be the next Mamas and Boats of the world and India. I think it'll be great to hear about that.
So, honestly, I don't think I have one magic mantra that says, okay, do this and you're a 500 crore brand. So our criteria of choosing the company is what you said, right? I mean, we always put jockey first before the horse. So if we intuitively have a good sense about the founders, and there's something, and I have done deals, but especially when I was investing my own money in some of these companies I mentioned are my personal investment.
Yeah.
I mean, they were almost like, instinctive decisions saying, this is the guy I want to bet on and he'll figure it out. Yeah. And the classic example of that, the two names you mentioned are Paperboat and Epigamia. Both started with a completely different business. And Epigamia was actually in the ice cream business with Hokey Pokey, Paperboat at Zynga. And just that the caliber of the founders and their team around them were able to figure out not only that there were some issues with the proposition that they were chasing, they were able to pivot out of that and do something different. Yeah. So that's why betting on the right founder and the founding team is to me the most important. And you learn it with age. That's the skill that you cannot learn in a textbook or coming out of a top-end business school. It has to be learned through grinding and just seeing what works and what doesn't work. And even then I can tell you I would fail 5 or 10 times just on that one count. I think on the aspect of what you said, what makes a good business successful, I would say it's a definition of what success is. So honestly, if you ask me, if somebody is wanting to build a very high-end premium, let's say a personal care beauty business using the top-end ingredients and all that, then they are going into that with a very clear mind and mandate, saying, I'm going to be a niche player, but I want to be a very high-quality premium brand. Versus somebody who says, I want to build $1 billion business and this is the way I'm going to build it and this is my roadmap. So I would say, first of all, for every entrepreneur, you have to define what your definition of success is. And not every company needs to be a unicorn. In fact, I strongly believe that, that's the wrong metric that we are chasing for every company. Second is that if you are in a space where you can see why your whatever value proposition, whether it's a brand, a service, or whatever you're doing, why is that solving a very critical need for a consumer? And why are you different? And how can you stay different from the competition? So it's very easy to say, okay, today, healthy snacks is exciting. So, there are kale chips and there are chia chips. I'll also launch something. It doesn't work like that. So I think that's the second piece which a lot of entrepreneurs probably miss out on, is they see something working and they say, if I can replicate that, it can work. And very often, there are global examples where we have seen success, but I would say be very careful in understanding your consumer. So in our business, if you don't have a consumer insight, don't start the business. You need to understand what is that need, how do you solve for it? And the last point I would honestly say, which is almost critical for any entrepreneur to see success, is the foundation of what you are building and how you are going to continue to build that strong building blocks of success. Don't ignore those. Don't say that today my unit economics is poor, but tomorrow it will get better. So yes, there is a margin of improvement, but I would be very wary of somebody coming and saying, listen, I make only 10% gross margin today, but with scale, I'll make it 50%. It doesn't work like that.
Yeah.
So I would say, be honest about what you're trying to do. And fundraising should be a part of the solution and not the end of the journey. So to me, raising money from investors has its own double-edged implication, and not every business needs to. And now we have so many exciting examples of companies who are not VC funded and still build billion-dollar businesses. So it's a basic, I think, finding that consumer, whether it's Mama Earth who found that intuition of made safe and good for you, all natural, or Licious who found the unorganized market, or Boat who found that there was a gap between the low end cheap imports and the branded players. So you have to find that sweet spot and then own it. If you can do that and you can sustain that over time, I think you are in line for a great business.
Absolutely. No, again, a lot of great fundamental pointers, and also pointing out that, fundraising is a means to an end. It's not the end, and it has to be treated as that. And I love how you define success. Like, you can't chase a particular definition of success. Define it your way, follow it your way with the right fundamentals. Love that thought. Thanks for that, Kanwal. I think, further, I have one last question on the end of the entrepreneur, and then we can go on to concluding segments. But as we think about the entire spectrum, we've heard a bit about the VC model, about Fireside, and about how entrepreneurs are chosen as well, or how you decide to invest in them. But how do you think investors should look at entrepreneurs should look at investors, in fact, right? If we flip the ball and we try and understand how entrepreneurs can perhaps choose their investors, what should they look for, what is the ideal partner like, and what they can do best to maybe figure out their research better as well, maybe ask the right questions to investors as well, and figure out who that partner for the next 10-15 years is going to be like. I think that'd be great to hear.
Absolutely. And I think I've already partly answered that. If you look at what role investors should play in the evolution of the business and in the life of the entrepreneur, those are the questions that the entrepreneur must ask. And whether you ask it directly to the investor or whether you ask it to the ecosystem, one of the most important aspects, I believe, for an entrepreneur from a diligence point of view is talk to other entrepreneurs. Yeah. Because there is no better, and sometimes we even encourage you to talk not only to the other entrepreneurs which a VC has funded, but to entrepreneurs which a VC has rejected. Because how you behave with both sets of people will actually tell you a very insightful, idea about how this VC is. I will also say something, there is a lot of skepticism when you say things like that. Entrepreneurs will say, listen, my business can't survive without money. Whoever is giving me money, it's the color of money is still green. I will take whatever I get because, these are big, macro ideas of saying choose your VC, etc. But I must tell you that if you get a wrong investor in your cap table, it can be the beginning of the end in itself. Because very often, there are situations where if the VCs, so it can be a passive VC, which is still good enough, then at least, you have the money and you're backing yourself. But there are so many different types of investors who can get very intrusive, who can start dictating to you or directing you how you should run your business, who almost treat you as if you are an employee or a manager in a firm. And therefore, you report to me every week and I want to know what's progress going on. No, that to me is not worth any amount of money or valuation that that person is giving you. So that's the diligence you need. You can always have your own wish list of, these are the 5 investors that I really hope I can get money from. I've done my homework and all. And if it doesn't work out, then that's not the end of the world. Yeah. But taking money from an investor who has a reputation of, being extremely, let's say like
pushy,
too directive, too hands-on, too aggressive. Yeah. I would say don't take that money and then figure out what are the other choices before you, rather than do something which is almost like destined to fail.
Right. No, absolutely. I think those are phenomenal pointers again, and we have to echo them as much as possible till it gets eternalized, because these are the start of partnerships which can't be broken. And so the stress on actually doing your due diligence on investors is extremely crucial. Wonderful to hear that. And I want to now take a couple of last minutes on understanding a couple of double-edged swords, contrarian thoughts from your end, and I think that'd be a great end to what has been a spectacular conversation. One of them is actually context switching, right? And this is again a debate which has been out there for long, but from your experience, juggling from, let's say, a personal care brand to a lifestyle brand to a food and beverage brand, how do you do that, and how do you internalize so many of the different moving parts from maybe one company to the other, and maybe then the administrational overhead, the founder in you building Fireside and managing the team, and then fundraising with LPs, so many of the different barrage of things that exist. How do you flip from one end to the other, and how do you ensure you're equally, if not motivated, engaged in all with the perfect, let's say, commitment? I think that'd be a great pointer to solve for.
So, honestly, my biggest learning in pretty much everything that I've done is hire very high caliber people and then give them the space to demonstrate that caliber.
Right.
So to me, like I said earlier, I would heavily depend on my partners, on my VPs, on my associates, my analysts to become the backbone which allows me to function more successfully.
Yeah.
So if I have to, so what we do is every board that we participate in, first of all, every company we invest in, we do take a board seat. But every company also has a board observer seat where one of our VPs is alongside us. So there, the intuition is that they are learning, they are being able to understand how to work with young companies, what kind of value you can bring. So there is a learning exercise, but they also bring in this perspective of helping those companies. And to me, that has been the most satisfying in the last 4 or 5 years since we started Fireside, to see how some of these, younger team members of ours have stepped up to the plate and really delivered in quality and competence. I mean, it's almost a matter of pride, right? The same pride I take when my kids do something exciting. I feel like, I'll give you an example, again, without naming names. One of our VPs had a presentation in a small firm who wanted to, understand digital marketing, and somebody, who was part of that thing led to another. A very large institution has come back and said, listen, we loved what we heard and we want to work with you guys. So to me, that is the, biggest achievement that you can have when your younger teams can stand up and, represent you in a way that people come back and say, we really enjoyed that experience. So to me, that is one part of the solution. To the question that you were asking about switching context and what you do. I think second is, like I said, you don't pretend to be a specialist. So if somebody comes to me and says, okay, you're on the board of board, and therefore, you tell me what the exact, technical qualities are in every speaker on board, I don't know. And that's not my job, because then if I start going into that kind of depth of detail, then I am stepping on somebody's toes. But what is the strategy for a brand like Board going forward and how they should think about it? That's the place where I want to spend most of my time. And that then, gets honed by, like I said, by a wider set of experiences. Right. So as long as you define your role and you understand what you can and what you can't provide to the table, and you're comfortable in that skin, I think I find it very, I don't, worry about saying somebody knows more than me. Yeah. Because that is a reality. I mean, I cannot change it. I can, just pretend something different and, create stress for myself. And I guess age teaches you that, right? I mean, saying at 58, I've also seen that, I can't be everything to everyone. So I'm very happy in my skin of, only thing I want is that, again, the point you're asking about culture, I think if we can get, very high performing, exciting young talent who can independently solve for these, it makes our job so much easier.
Yeah. No, awesome. I think again, you're approaching the problem and taking it as a solution to not have the problem at all by making it solvable by the team. And if it does exist, then having the humility to accept that it's not something that you're an expert on, and it's a process that keeps evolving itself. So that's wonderful to hear. I think for the next one, I want to be extremely specific and talk about feedback, because again, leading up to the episode, when I was brainstorming, I realized that feedback is so much of what a VC does. And somehow we're not, let's say, taught to either take feedback or deliver feedback in the right manner, right? But even if it's a rejection, or even if it's an acceptance, if it's investment advice, if it's journey advice, scaling advice, all of it is feedback in some shape or form, right? So if you can talk to us about how have you observed delivering feedback, and also how founders can best either take feedback or even advice when required, that you need to gather expertise in this or whatnot. How that diaspora works, I think that'd be fabulous to hear.
So, again, the underlying tenet is the same. You have to be honest, you have to be transparent, and you have to be well-meaning. If I'm telling somebody that we are not investing, there is absolutely no right I have to believe that I know it all, and therefore I am taking a decision because that guy is doing something wrong. I'm not investing because I am not able to fit my thesis and my model into that person's business.
Right.
It's not that the business is wrong.
Yeah.
And like I said, very often we meet companies and we tell them, say, you have a very interesting business. This can be a very, very exciting business in terms of what you can build around that brand. But as a VC, I have certain obligations in terms of the size of business, the amount of money I invest, the stage I come in. So therefore, first you have to be, humble enough, and you have to be honest enough to believe that, you don't have all the answers.
Yeah.
Second is that it is all about influence. It is all about influence. In fact, I'll give you an example. One of our founders has an international business. Doing extremely well and growing from strength to strength, and he was very keen to launch in India, and we struggled, and it's in a category where I have some personal experience because I used to run that category in Unilever, and he kept telling me, listen, I really want to check it out, I think there's an opportunity. Finally, my answer to him was, okay, why don't you define it as a test? Carve out how much money you want to spend, what do you want to achieve, and do it as an experiment. Don't just, bet your bank on it. Because there is no point in me saying it's a good idea or a bad idea. I can tell my experience, or I can tell from an industry perspective, these are the challenges. But allowing him to, do it for himself, he gains a lot of confidence between our relationship that, this is not a 0-1 game. And second is, the learning will happen best only when you are doing some of that stuff. Then you talk about, okay, who will do it? What's the organization? Is the distraction? So very often, my own belief is that telling somebody yes, no is never the answer. And, true for our kids also, right? I mean, I can't tell my children today saying, don't do this or do that. These are the challenges. And, if you want to try something, then be aware that these are the challenges that you have to get off. So feedback is all about honesty and transparency, and genuinely have the other person interest at heart. So back to the entrepreneur first. And very often we have seen situations where, entrepreneur is, we know he's doing something wrong, and we genuinely don't think that it's the right thing. And we have told the person, and he decides that he still wants to do it. Then, beyond a point, you also have to then step back and say, listen, the relationship is going in a different direction. Let me focus my energy on something else. Yes. So again, it's, I guess, a little bit comes with age that, everything will not go right. So just focus on the positive things, and, how do you build on that?
Absolutely. The acceptance and the humility factor, which is all throughout a constant theme, is wonderful to observe. One of the second last questions for me is, I know that you are personally passionate about sustainability now, and I'd love to talk about one of those aspects as well, because there's a huge focus on diversity as well. 50%, almost 50% of the Fireside portfolio is of women founders, which is a feat and number which is unprecedented in nature. So some of these personal beliefs and principles that you have now embodied into principles that Fireside is pioneering, and for the right reasons. So if you can talk talk to us about some of these passionate things that you have and how you're championing them? Where does it come from and how do you see that moving forward as well? I think that'll be interesting to observe, because again, a lot of things in the ecosystem have to happen. Sustainability is not an if question, it's a when. Diversity has to happen, it's not an if question, it's when. But you're already championing that, so would love to gauge your attention there.
So honestly, if I can put it down in very simple things, these are, personal beliefs. So what we call the value of good, I think that's something that is inherent to who we are and how we have lived our lives, and how our team came together. So in a way, like attracts like. So at least I firmly believe that everybody in our team, believes genuinely in the value of good, because we have the almost the privilege of being able to influence some of these things at a scale which can be very interesting. So it's almost like, responsibility that you take on yourself and you say, okay, what can I do with it? So nowhere do we say that, we will invest in a female founder because she's a female. But we take pride in the fact that 50% of our founders are women, because we also believe that 90% of choices that any family, individuals, whether male or female, make are actually driven by women. So I mean, it's so logical that women should be the people who are actually running the businesses. And in fact, one of the big internal objective for us, which we are slowly filling up, and some of the team members in our team, so you have an idea about that, is how do we also build diversity within Fireside, so that we have a good balanced mix of men and women who are running the show. So that is almost like it's a no-brainer. I mean, it's who we are, what we do. I think where the bigger aspect of, let's call it, sensitivity to the environment, to the planet, to the society, that is again driven out of personal value systems and what we have seen in our lives. What we are doing about it is actually probably more important. And what we have done now is we have recently hired Reemsha, who's joined us as a chief of staff. She comes from Dasra, which is a non-profit organization. And she is driving the agenda of ESG to the extent of saying, what is our role? How do we want to live our lives? How do we want to work with our companies? What is the diligence we want to do to even filter out companies that we believe are aligned on the ESG counts? And most importantly, which personally I'm most excited about, is how can we help them move to the next level, For example, one of the areas that we have taken as a specific objective, and Reemsha is working on several projects there, is this whole concept of packaging, and especially single-use packaging. Because the amount of plastic waste that gets generated by single-use packaging is just humongous in terms of the quantums. So we are actually working with packaging suppliers. We are working with different types of ecosystem partners to identify. And once again, the power of aggregation. This we go to people and say, listen, help us find solutions which we can then roll out to not just our 25 portfolio companies, but to hundreds of other companies who would be very happy to take these solutions if there is the right product value, that combination is delivered. So it's really living ESG as a living, breathing, everyday scope of what we want to do is really the exciting part. I think philosophically, most of us, like you just said, understand that there is no choice. But what do we do about it? And I've said this before, to me, even small baby steps, I see as the glass half full rather than half empty. And that's how, you have to keep, celebrating these small successes.
Absolutely. No, that's wonderful to hear, simply because, as you mentioned, I mean, action really matters, and we can talk about it, preach it, share it all we want. But if we are acting towards it and tangibly taking direction for positive directional steps towards it, I think that makes all the difference. And it's wonderful to hear that there's an ecosystem first approach going to everything as well, as opposed to just being one-sided or one-minded, right? So wonderful to hear that. Kanwal, as we end this conversation, I think I have to end with this one particular question, which is the $1 million question for you, in fact, because I'm sure every founder wants to ask you that, as you see the next wave of global consumer companies born from India, or the next ones that will go on to dominate at the India level, what are some things that are extremely exciting for you? Not from a purely sectoral spectrum, but also things that will genuinely make a difference maybe 10, 15 years down the line, because I'm sure everybody listening in would like to gauge your vantage point to that extent. So it'll be wonderful if we can end on that note, but this has been truly wonderful.
Sure. So again, maybe I can be more philosophical about it. I think
Sure.
one of the overarching, almost themes, or let's call it philosophical mindsets that we are pursuing at Fireside is the concept of wellness. And we think that wellness, encompasses everything that we do, whether it's, sectors like food and beverages, whether it's personal care and beauty, whether it's health, whether it is, your own personal lifestyle. Because eventually, I think what COVID has taught us, and, it's been a rude shock, but I think there are some positive learnings there, is that, there is a critical need for all of us to be aware of what is good for us and what is good for people around us and the society and the world around us. And I'm hoping that this narrative of goodness can become present. And my fond hope is that the world emerges a much kinder world than it was before COVID, and that we take as the next 50, 100 years of success that COVID taught us. But I think the idea of wellness in every aspect of what we do is truly, I think, inspiring for all of us. So when we are looking at companies, we try to find, so there is a goodness and there's a wellness. And the wellness is the business, and the goodness is the overarching, value that you're creating for the world. So if you can get the best of both, then I think you are possibly onto something which is a winner. Yeah.
No, that's fabulous. I think ending with the wellness note is perhaps the best one we could have asked for. Thank you so much, Kanwal, for all of your insights, for being as candid as you are, and for laying down so many of your learnings across the years in this conversation. I thoroughly enjoyed it, and I'm hoping everybody listening in does as well. Thank you so much for your presence.
Thanks, Jivraj. Pleasure to be part of this. Thank you.